Hello, my name is Miss Melissa. Thank you for joining me in this course. It's accounting, and I know many people tend to think that accounting is difficult and hard and feel a little intimidated by accounting, right? But hopefully, I make things a little simpler for you and make it fun so that you can have a clear understanding of the basic accounting concepts. Okay, so this first video is on the fundamental accounting equation, also known as the basic accounting equation. And I'm just going to share a brief presentation with you so that you can follow along with me on this. Okay, so it's quite simple. The basic accounting equation is an equation, all right? And over here, you would see that on the left-hand side, we have assets. I will explain to you what assets is in a short while. Assets is equal to liabilities, another important word, which I will explain later on. Liabilities plus owner's equity, which I will also explain. But this is the basic accounting equation for accounting, and you will see this throughout the course. Okay, so again, assets is equal to liabilities plus owner's equity. So any business would have assets, liabilities, and owner's equity. Basically, the assets of any company is what the business owns. Okay, so they are the resources used in the business, it's what the business owns. And liabilities is what the business owes people. Okay, it's what the business owes people. Owner's equity is what the owners would have invested into the business. All right, so let's just go through that again in a little bit more detail. So assets is what the business owns. For example, now assets can be broken down into two categories. We have fixed assets on the left-hand side and current assets on the right-hand side. Now, fixed assets are those assets that are acquired for long-term use in the business, right? So for more permanent use in the business. For example, a business might have equipment, machinery, land and building that they operate on, or real estate, and long-term investments as well. For example, if they invest in shares or stocks, those would be examples of fixed assets. So those assets that the business owns for long-term or more permanent use in the business. Okay, and on the right-hand side, current assets are those assets that the business owns that can be converted into cash within 1 year. So it's for more short-term use in the business, right? And examples of those assets would be cash that the business has, inventory, accounts receivable or debtors, and I will explain what that means in a short while, raw materials, short-term investment. All right, so let's just go through what accounts receivable or debtors mean. Accounts receivable or debtors are people that owe the business money, right? So for example, if a business is selling cake, for example, and a customer does not have all of the money to pay up front for the cake, and let's say the cake costs the customer $100, but the customer only pays $50, then accounts receivables would also be $50. Okay, so it's a difference between the actual price for the item and what the customer actually pays. So accounts receivables in that case would be $50, which is the $100 minus the $50, because the customer still owes $50. All right. And raw materials, for example, again, if the business is making cake, then the raw materials or the supplies that the business will have to have would be things like sugar, butter, flour, eggs, all of those things, all of those raw materials that are needed to make cake. All right. So those are examples of current assets and fixed assets. Now let's move on to liabilities. Liabilities, again, are what the business owes. All right. So we have current liabilities on the left-hand side and long-term liabilities on the right-hand side. Now, current liabilities are those debts or what the business owes that are due within 1 year. Okay, so whatever the business owes must be paid within 1 year. And an example of that would be accounts payable, also known as creditors. I will explain what that means. Bank overdraft or short-term loan, wages owed, taxes owed. So these things, wages owed, taxes owed, will be liable or due within 1 year. Now, just as we have accounts receivable as an asset, we have accounts payable as a liability. Okay, so accounts payable is what the business owes to people. For example, suppliers. So let's say a business orders some items from a supplier and they were supposed to pay $500, but instead they paid $300. So it means that accounts payable will have to be recorded for them as a liability in the amount of $200, which is the $500 minus the $300. Okay, so those are examples of current liabilities. And then we have long-term liabilities. And that is simply what the business owes that are due after 1 year. So a business may have a mortgage on a piece of property, and that will have to be recorded as a long-term liability because a mortgage is usually more long-term in nature, right? About 15 to 20 years. So that's why we have mortgage as a long-term liability. Okay, so now we understand what assets are, what liabilities are. Okay, and assets can be broken down into fixed and current assets, and liabilities can be broken down into current and long-term liabilities. Now, the difference between assets and liabilities would give you what we call the net worth or the equity of the business, right? So the difference between your assets, what you have, and the liabilities, what you owe, is called the net worth of the business or the equity of the business. Can also be termed as the net assets of the business. Now, what do you think? Do you think it's better to have more liabilities or more assets? Well, if you said that it's better to have more assets than liabilities, you are correct. It's always better to have more assets for a business than liabilities. Let's think about yourself. Okay, I'm pretty sure that you have assets as well and liabilities. Maybe your assets would be things like your savings that you save up, your monthly allowance. If you have jewelry, for example, that might be an asset for you. And liabilities would be what you owe people. If you have student loans or other debts that you owe people, those things would be liabilities, right? So it's better to have more assets than liabilities any day of the week, right? All right, so those are some examples again of assets, liabilities, and then simply the difference between those two is called your owner's equity or your net worth. All right, so this is your assignment to see if you fully understand the basic accounting equation. So your assignment for the basic accounting equation module would be for you to find some missing numbers based on what was presented to you. So in some instances, you would have to find a missing figure for assets or liabilities or owner's equity. And it all comes back to that basic accounting equation. Assets is equal to liabilities plus owner's equity. So if we look at this example here, we have assets is equal to 50,000, liabilities is equal to 30,000, right? So let's put 50,000 as your asset and 30,000 as your liabilities. Therefore, your owner's equity would be 50,000 minus 30,000 is equal to that owner's equity, right? So your answer for this one would be 20,000 is equal to owner's equity. Now, just with any mathematical equation, if you were given, for example, if you were given assets and owner's equity in another question, and you need to find liabilities, then the same approach will work. So let us say, for example, we have assets of 100,000 and owner's equity of, let us say, 25,000. And we need to know what the liabilities are. Then it's simply the asset minus the owner's equity. So again, we have, let us put 100,000 right? So we need to find the liabilities in this case. And it's simply 100,000 minus 25,000. Okay, so very simple. Once you know how to minus or subtract and add, this is a fairly easy exercise. All right, so feel free to message me with any of your questions if you're having any trouble understanding the concepts shared in today's class or any trouble in figuring out the assignment given to you. I look forward to seeing your answers posted on the classroom page, and I will see you again very soon for the next video. Bye bye for now.